Welcome to the Exeter presentation in the AGORACOM Online Gold and Commodities Conference. My name is Yale Simpson. I'm Executive Chairman of Exeter, and I'll be presenting our company to you today, as well as answering questions posted by investors who are watching the presentation at our scheduled time. If you're watching this presentation outside of that scheduled time, please post your questions, as we will be checking in over the next couple of days to answer them. Before I begin, I would like to ask that all of you take the next 10 seconds to review our disclaimer, which you can also review at any time coming back to this slide. You're now looking at our capital structure. Exeter has approximately 72 million shares on issue. I think what's important in this slide is the ownership of the company. You can see between management and institutional investors, 70% is controlled by a relatively small group, and cash is $72 million. When you invest in Exeter, you're really buying into resources. For each Exeter share, you can see 0.3 of an ounce of gold, you can see almost 0.6 of an ounce of silver, 68 pounds of copper, and $1.03 in cash. Now, looking at today's metal prices, you can translate that into in situ value. The projects I'm talking to, Caspiche and Cerro Moro today. Caspiche is our big discovery in Chile. It's in a district called Maricunga. The Caspiche project really ranks as one of the big discoveries made by the mining industry in some years. It is world-class in size, and finding it in Chile really makes it a unique opportunity. The project is between the Maricunga mine owned by Kinross and the giant Cerro Casale deposit owned jointly by Barrick and Kinross. The project is midway between the two, and as of the drilling that was completed last May, we announced 19.6 million ounces of gold and 4.8 billion pounds of copper. The landscape at Caspiche is relatively undulating once you're up to the elevation where the project sits at 14,300 feet. It is not rugged by normal standards. We operate there from an exploration point of view for 7 months of the year. Mining on the project immediately north of us, which is the Maricunga mine, it is all year, as are other operations in the district. This slide shows the 43-101 compliant resource. It's all inferred. This is based on the announcement in September the 14th of this year. You can see on this slide that there's an oxide zone and a sulfide zone. This is a porphyry, and porphyries characteristically have these two zones. There's actually two tables on this slide. The upper one refers to the total resource estimated by AMEC International, and the AMEC is an independent engineering firm, where they wrapped a hypothetical pit around the total resource, coming up with 1.1 billion tons of rock at 0.55 grams per ton gold, and the copper being 4.84 billion pounds of copper, for a total gold equivalent of 32.4 million ounces. Now, within that is a higher grade zone, which I will show you, where you capture two-thirds of the total metal within half the total tons. And this has important implications going forward. This shows actually a cross-section, so it's like looking at an apple, slicing it in half, and looking at it side-on. This shows a number of things. It shows a red zone, which we refer to the higher grade zone, which was shown in the previous slide as the second table. It also shows a pit, and you can see the AMEC pit as it's labeled. You can see the depth to which this pit captures the mineralization, going down approximately 1 kilometer. And you can see the potential to exploit either the area in red or to take all the colored areas which exceed what the nominal cutoff grade of 0.3. So AMEC, who did the resource on this, essentially looked at it from an economic point of view, saying if we take economics that are consistent with projects of this size, how much of it could fall within an open pit? And you can see on that, that's the open pit. That's a very critical slide because it also shows you that the deposit didn't end at the bottom of the pit. That's simply the limit of our drilling. Is it likely to be larger? Exeter thinks so, and the drilling that we are doing is to drill it in directions you can see on this slide to the southwest and to the southeast. We're drilling holes here down to a depth of 1 kilometer, and we're also drilling infill holes to convert the project from inferred to indicated ounces. So the activities we have going on now are twofold. Exploration is consisting of infill drilling. It's consisting of drilling to make the deposit larger, but we're also doing development activities. These activities relate to the metallurgy, the infrastructure, where the power would come from, where the water would come from for this project. We've started the environmental baseline work, and we're looking at potential scenarios for open pit, underground, site layouts, all of those things that relate to project development. Now, there's a reason for that. You typically don't do that work while you're in an early stage of exploration, but there's considerable value to be added to take a prospect into the project stage, in other words, to begin to show the economics of the discovery. The Caspiche development schedule is shown on this slide, and what it sets out, you can see across the top, 2009, 2010, and into 2011. And it sets out the various activities from drilling through the environmental baseline work, through power studies, and into what we call development option study. Now, this is looking at the scope of the project from a mine development point of view, such that in Q4 next year, 2010, Exeter is looking at this project from the economics of it, not just the exploration side of it. We're doing that because today, Exeter, this project, being an early stage project with inferred resources, you're really looking at the optionality on gold to give a value to the project. And the market would value Exeter, you can see across the bottom in yellow, at about $20 per ounce for the ounces it has. But as projects like this move into recognizing the development potential, you start to value them on the NPV, the net present value, and into a premium to the NPV, which is what you have seen in other companies like Osisko as it's moved through that process. So I'm moving on to talk about Argentina. The project here is very different. It's a project called Cerro Moro. It's way down south. It's 49 degrees south, which is about as far south as Vancouver is north of the equator. It's within a mining district. It's at an elevation of approximately 100 meters above sea level. The Cerro Moro project is unique. It's very high grade. By industry standards, the grades are what we really saw almost 100 years ago in some of the old mines that were mined through Mexico, through the U.S., through Peru and Chile. Very high grade by industry standards. This shows the location of Cerro Moro. It's very close to the coast. There's a town to the northeast of the Cerro Moro project called Puerto Deseado. Importantly, on this slide, you'll see that overall Exeter controls 870 square miles of licenses. We are close to infrastructure. We are close to water. So this project does not have the challenges of operating at 14,000 feet in the Andes. Also, on the western part of this slide, you'll see there's a mine being operated today by